Report. It's Blake from Trade Tracer. As always, none of this is financial advice. Always in trade, invest at your own risk. Okay, so let's go ahead and get started. I want to kick it off with the S&P 500. We are in a 10-day downtrend. And those of you that follow us, you know we are still preserving cash and massive year-to-date gains ever since we entered what I classify as no trend on September 3rd. So once we had price break and close below this simple 10 SMA, that was a signal to me and to my team to go ahead and we need to start taking some profits off the table and move to cash. And I was pounding my hands on the table this entire uptrend, especially when we were getting late in this trend around day 20. I was saying we need to take money off the table. It's not time to be pressing longs. And you can go back on Twitter and videos to verify that. So currently, we're still in a 10-day downtrend. I am not shorting this market right here because I think anything can happen, and that's why I preach keeping an open mind. This looks extremely bearish. Yes, we are bear flagging below a previous all-time high, and we'll go ahead and show some of the analysis that I'm looking at here. So we have a previous all-time high that we broke out, and now we're flagging or trading below that previous all-time high on the S&P 500 on the SPY. That's a very significant level to watch is this 339 level. Now, we don't really have real support until we get to this fib right around the 325 level. Okay, so I'm going to go ahead and get rid of this so we can see some of the other things I'm looking at. Now, one thing I want to bring up is this anchored VWAP. Now, those of you that follow, you understand that one of the ways that I like to look for potential areas of support or levels of interest is by pulling up these anchored VWAPs. And this is a great way to utilize price, volume, and time in a moving average. It's a great way to combine those three factors in the market, and probably one of the best ways to do that, actually. So this anchored VWAP is from the June 29 lows, and you can see price on Friday actually respected that almost perfectly. Yes, we did have price weakness confirmation with breaking below this flag of the this bearish formation. So it could be a potential let's trap more short sellers and rip higher next week. Completely anything is on the table right now. Friday was quad witching. We had multiple expirations on the market. And on those types of days, I like to sit back and just let the market develop and let it do its thing until we have higher odds in our favor. Now, the hardest thing in trading, in my opinion, it could be different for everybody else, but for me, the hardest thing for me to do is to not trade. Uh, Obviously, we like to trade. It's what my passion is trading. And so when the market is presenting, these huge volatile fluctuations, and I'm staring at the screen, it's difficult to have the discipline and the patience to sit on my hands and wait for higher odds. And those higher odds come when price gets back above this 10 SMA with the MACD in our favor. Now, I want to make one thing clear. We are roughly 50 days from an election. I think the easy money is over these trends where we just go straight up every single day. I don't think that's going to be the type of trading environment that we are experiencing up until the election is pretty much finalized. I think we're going to see some volatile trading, some choppy trading. So be prepared for that. All right. Now, if we come back and price closes above this 10 SMA, we do have rules to engage a long trade. But if it comes without MACD, if MACD is not in our favor, if it's not moving higher with price, it could be a very short-lived uptrend on the next run. So keep that in mind. We definitely want MACD. We want momentum in our favor in an uptrend, right? So that's what helps carry these trades. It's what helps carry the trend is the momentum. So if we don't have momentum, it could be a short-lived uptrend if we even go up into an uptrend. I'm not trying to, predict we're going to start an uptrend right here. It could. It doesn't matter to me though. We could come from lower prices when we hit an uptrend, but it still doesn't matter because we're still preserving cash and massive year-to-date gains until higher odds present themselves. All right, so I just want to make that clear. I'm still sitting cash. It's difficult to try to trade. If you're sitting at your screen, you're going to be tempted. Now is the time to, take some time off, enjoy some of these gains. I will definitely alert you when odds are in our favor, and we will get great trades. Okay, we don't have to pick the bottom. That's not our style. I never try to catch a falling knife. All right, and anybody that's been in the business long enough to understand, you know, how to be successful over multiple years and a consistent over a long time frame, that's not a trading strategy that's going to, be consistent enough to keep you in the game. All right, so I want to make that clear. So before we continue on, let's go ahead and take a look at some weekly charts, right? So from an investment perspective, you guys know that I love to look at weekly charts as an investor. Now, daily charts are more for trading and for swing trading, but the weekly chart is what I primarily focus on when making decisions in my own personal investment accounts, the long-term investment accounts. So once again, we're breaking the 10 MA on the S&P 500 on the weekly with 3 consecutive red weeks. All right, that's a bearish signal. There's no doubt about it. We'll likely be playing even more defense this week if we can't get price back above basically that 334 level, okay, on SPY. So now that we're in a downtrend, my focus has shifted, primarily to the indexes because I'm not really focused on making any sort of individual trades until we have the indexes in our favor. Okay, so we're going to be focusing on the SPY and the Nasdaq. And right now, the SPY is actually closing in no trend on Friday. As you guys know, we are still heavily in gold. We have some bond exposure and also some equity exposure, but nothing leveraged. We're not leveraged long anymore. So could be potentially playing some more defense into next week. I would love to see price get back above the 334 level on SPY. That would get me a little more comfortable, but once again, probably won't get leveraged long until we have some clarity on some elections. All right, let's go ahead and take a look at bonds. Bonds on the weekly doing nothing, nowhere. Same with the daily, pretty much going nowhere. How's gold looking? You guys know I do like this gold setup. This is a wedge pattern. Wedges aren't one of my favorite trades to trade, but regardless, this is a bullish formation. We're coming off of highs, this massive uptrend and consolidating near the previous all-time highs. And if we go ahead and look at a monthly time frame, you'll see that 185 level and why that's significant because that was the previous all-time high in 2011. Now, right now we're basically flagging right at that level. So until we can actually get price strength confirmation above that level, not too interested in gold because this could also potentially be an area of rejection. So as you can see, we haven't closed above that on a weekly or on a monthly level yet. So, and we are still fairly far deviated from that 10 MA on the monthly time frame. So keep an open mind once again. Understand your odds, know where you're at in the trade, and understand the time frames that you're trading. All right, keep it simple, guys. Let's see. Let's just go back to SPY. I really don't want to cover. Actually, no. Let's go ahead and cover some tech because tech could be one of the things that is we take a closer look at once we get this next uptrend. So I want to pull up the 50-day moving average. You'll see a lot of these names are actually trading below the 50 MA, which is a bearish signal. I'm not gonna, sugarcoat that. That is a bearish signal. When stocks that are leaders like Apple, Amazon, Netflix, Facebook, when those mega stocks begin to lead the way down, that's typically not a good sign for the market. And seeing prices close below their respective 50-day moving averages is not a bullish signal. So we have Apple breaking below the 50, Amazon as well. That looks fairly bearish to me. Google, once again, looking extremely bearish. Netflix, same type of deal. Now, Tesla is actually holding up. All right, I posted this on Twitter, who's buying this dip, paid off very well. However, we're going to have to wait and see. We don't want to be jumping into stocks when the market is looking like it could potentially roll over. Those odds just are not in our favor. But once we have price on the market back above that 10 MA, we have some momentum. These are going to be the names that I'm going to be looking at. All right, so just to wrap it up here, guys, keep an open mind. That's the thing I can stress right now is yes, everything looks very bearish, but the only thing that looks bullish to me is that everything looks too bearish. And I'm not a sentiment guy. I'm not a contrarian type of person. I'm a trend trader. But right now, to me, this just feels like It could go either way. There's no clear edge. There's a ton of risk out there. So why would you want to put yourself in that type of trading environment? You wouldn't, okay? This is the time to be patient. Wait for higher odds, and I promise you, you will be handsomely rewarded. Okay, so that's all that I have for you today. And make sure you go ahead and like and subscribe and check us out on Telegram. I'm going to be putting that in the description. Take care.